professionally. It's just that when you get this old, you've done a bunch of whole different things, you know. Now, what you're going to see today is something that each and every one of you could have done, but you didn't have the database. Whereas my business associates had the database, and I thought, oh, that's really cool. Let's play with it and pull some of these things out that people haven't ever seen before with respect to Western Canadian cash crop prices. So none of this is statistically difficult. It's just an equal sharing of information. Over time, the databases are developing across Western Canada. More people will be able to do this. Eventually you'll see something similar, or your students will be doing something similar 10 years from now, and this is sort of what it could look like. So we're going to look at seasonality, because everybody always thinks that this year is completely different from last year, and it's not. But let's work our way through, starting with the logic behind it, and then some of the different ways of teasing out seasonality. Of course, it starts with the seasons. Agriculture has a rhythm all its own. Now, because this is inaccurate, not just the scale, as anyone knows, the Earth doesn't go around the sun in a circle, it's elliptical, right? So that has a bearing. In terms of seasonality, the most famous seasonality is harvest time, and this painting from 500 years ago still has a lot to tell us. Not only do we have to take a break from our harvest, and this guy is under so much harvest pressure, I think he had been drinking the beer that this guy is currently consuming. But over here you'll see a Super B loaded, and there are ships riding an anchor in the bay, undoubtedly waiting to get into the terminals for rapid loading. Much the same way as if we could combine a picture of Saskatchewan with Vancouver, it would look like this, perhaps. Anyway, the other thing I find really interesting is how tall the wheat is. You know, the genetics have changed. You guys have, worked magic. But anyway, I know that this is a very hard chart to read, but what it does is the green rectangles show planting seasons in different countries, and of course, when the grain is ripe, it's the golden color. And you'll notice that all around the world, something is being planted or something is being harvested. In terms of global wheat, the dead zone is, if you will, up in Australia. If the Australian harvest is running late, it can go to the end of February. And in India, if the wheat harvest is running early, it can be into early March, late February. Other than that, the February-March window, let's call it a 6-week window, is the one period of the global crop year where wheat is not being harvested somewhere. It's one of those things that we think in terms of the winter wheat harvest in the United States as being in June or July, and the spring wheat harvest be here a few months later, and we forget that it's a global crop, and it's grown in a lot of different climates, and it moves around. What we can do, though, is take all of this confusion and summarize it. And essentially, there are certain peak periods of supply. And so, but if there is a pattern in prices, if this has a bearing, how do we tease it forward? Well, one of the things we'll want to look for is a difference between buying pressure and selling pressure, and whether or not demand occurs at the same time as supply, or whether there's offset or what have you. The other thing to remember is that the number of buyers always equals the number of sellers. Well, sometimes there aren't enough buyers, and that's when you have a surplus. But it's not that the buyers will outweigh the sellers or vice versa, because they always have to match. It's the aggressiveness that changes It's the behavioral aspect of how much somebody is prepared to pay or how willing somebody is to get rid of it that causes the price to go up or down. Well, as we look through the crop year, if we assumed that they were both steady on both sides of the market, we would have prices always flatlining. But that's not indeed the case. We can have, in the Canadian market, we can have certain large players come in at certain times. I think this jumped a slide, yes. There is on the part of the large population countries, there is big bulk buying at harvest. And the reason that they want to buy in bulk is that when you're feeding hundreds of millions of people, you're not going to try and be too cute about the saving a nickel here or a dime there when you are buying hundreds and thousands of tons. The point of the exercise is to get what you need from one country, bring it home, store it for when you're going to need it, get that job done. It winds up being a question not so much of pricing, but of logistics. So in the bulk buying, we might want to be able to distinguish between large customers like India and China. And then there might be other smaller players at different times of the year. So buying is not at a steady pace, and neither is selling. Selling, as we saw earlier about the people exhausted from harvest, well, very few farmers have 100% storage capacity. So there's always a temptation to sell off the combine, some portion of the crop. And given that large buyers are coming to Canada to buy when massive quantities are available, it's not necessary to have 100% storage because there are buyers prepared to take it almost right away. But because the buying and the selling is not even, there will be an interplay in prices where things move up or down depending upon people's relative aggressiveness. Now, the statistical challenge is that when you're looking at price changes, is to decide how you're going to do it. And if we look at something like the equity value of U.S. common stocks over the last 50 or 60 years, almost 80 years, the U.S. economy has been growing, the stock market has continued to evolve, and you have a trend bias. So one of the things that you would have to do, looking at the U.S. stock market, is you'd have to detrend it. If you look at commodities, and this is a price chart of wheat in Canada, composed of 3 different databases going all the way back to Confederation, you can see that prices are slowly accelerating up, but it seems to be lumpy and jumpy. And in fact, we might ask the question whether or not, instead of having a trend, whether or not there are a trend in the market, which is important to investors. Investors are looking at percentage rates of return, right? So they're looking at constant growth. In commodities, you won't get that. You get prices moving above certain thresholds. For example, like right here, and what used to be the ceiling becomes the new floor. This is possibly a ceiling that might become a future floor. And so you say to yourself, well, what do I do with that if I want to establish seasonality? And particularly if we go to one of my favorite theories, which is called, I call it the toothpaste theory, because if you've never noticed, when you squeeze the toothpaste, you can't get it back in the tube. And I think there's an argument to be made that, at the beginning of this chart, those are the days of McCormick's Reaper, as opposed to the massive combines that we have now and all of the sophisticated technology. And it's quite possible that the supply and demand relationships will be in certain rough ranges or boxes throughout a generation, and that generation might reflect the demographics, it might reflect the available yields on different varieties at the time, the technology might also reflect the general social pricings and monetary policy, could also reflect weather to a certain degree. So maybe one of the things is that we have to ask ourselves in commodities is, can you have really accurately do long-term seasonality? Well,
are those inflation adjusted prices?
no, those are stated prices.
So I mean, would it look a lot more?
If you did inflation prices,
Because we'd be going-
inflation adjusted prices,
Right.
it would be a massive bear market.
Right.
Right. And so then you would have to detrend the massive bear market. Does everyone know what inflation adjusted numbers are? If we take the stated price and adjust it for the inflation rate to come up with a real price, because of the increased productivity of agriculture, larger yields and what have you, and different kernel sizes, the effective price of eating has gone down over the last 150 years. And so if we were going to look at inflation adjusted price of wheat, we would be trying to we would not be looking at this slowly accelerating curve with boxes. We would be looking at adjusting for a massive bear market. So, all right. The investors always like percentages because they seek percentage returns in the marketplace. Farmers, though, ask the question, soybeans. This year, soybeans are about $1 less than I'm usually used to getting at this time of year. They think in terms of the prices that they remember. And they define normal as their recent memory, which is the last 5 or 10 years. Well, if we want to do percentage calculation, what we can do is we can pick a date like December 31st, and in the following year, we can, if for example we were to take March 1st of the following year, and we go back and all the other March 1sts for 5 years prior to that, we could compare them all to a December 31st of the previous year, and we'd wind up with a percentage change over the first 2 months of the year. And those percentage changes over the first 2 months, we could add up and divide by the number of years that we used and come up with an average gain or loss for that particular date. If we want to do with average prices, we would just take the last 5 March 1st, add them together, divide by 5, and then we have an average price for May 1st. It might feel a little bit like what the farmer was thinking that he should be getting on a day like today. Well, the percentage approach, this is one that's popularly used in Canada. And by the way, this particular website was developed by the son of an acquaintance of mine, and it's an incredibly popular site. If you have portfolio investments, you might want to look at it. But see, they start at 0 because if you compare January 2nd, which is the first business day, compared to January 31st, very often the change is going to be minuscule. And then you see the escalating departure over the rest of the year. Another way of looking at a percentage seasonality is a very famous research house in the United States, More Research. They have a product geared to commodity traders. And for example, somebody looking at trading soybean oil would probably be looking at either the May contract or the July contract. And so what they can do is they will take a specific contract, in this case it's July, they will plot the average for that single futures contract and then this year's progress relative to the historical average in percentage terms. And so somebody can say, well, the futures traders say, we'll know where they are in relative to history because they have money on the line and they want to study what they need to know. That's another way that's interesting, but it doesn't help us with local cash prices. So what we're going to do in this case, we've taken the average cash prices of Manitoba soybeans for each day of the year and plotted the averages. Now, why did I use Manitoba? And we're talking today in Saskatchewan. The data stream on Saskatchewan soybean prices really only became consistent and constant and had enough contributors to it to be statistically significant about a year and a half ago. So for this particular subject, we have to look to Manitoba's experience for a bit of guidance. And you can see that there are certain rough patterns. Interesting that the 5-year and the 10-year don't look that much alike, but we have to remember that since 2014, the commodity prices have been at a low level, and prior to that, they were at a high level, and so that's one of the reasons why a 10-year would look like a very different data set than a 5-year. What we can do so that we know where we are each year is say, well, we'll plot the progress of where we are this year, and lo and behold, that farmer was right. He is roughly receiving $1 less this year for his soybeans than he usually does. Now, we're just going to take the percentage change chart and the average price chart, and we're going to squish them together and look at their similarities and differences. In Chicago, in Chicago, it seems that it peaks a little bit later than we do here on the prairies. And also in the past, we have had this lumpy, jumpy price action at the end of August, early September, but in recent history, we've not done that. So, there's a rough consistency between the futures market and Manitoba elevator prices. And one of the things we have to remember are the differences. Manitoba is looking with prices. The Chicago graph was made using percentages. Manitoba is a cash market price. Chicago is a futures market. They have different terms of reference in terms of years. And delivery points are always important because the Chicago contracts are deliverable in Illinois, whereas obviously something that's 1,000 miles away from Manitoba. And of course, there's a currency difference. One of the big differences, though, is the difference between cash and futures. And I'm not sure, but is there anybody that doesn't know what basis is? Is there anyone who doesn't know what basis is? Everybody's good with basis, the difference between cash and futures? And so what we have is the Chicago price. We would convert the Chicago price into a Canadian dollar value. Then we would subtract it from the Manitoba elevator price, okay? And because the futures price is higher than the local cash price, we would wind up with a negative number. So we would say that in the case of soybeans, Manitoba was X amount of money under Chicago, or oats in Saskatchewan were under Chicago, or we were under Minneapolis in terms of spring wheat. So that basis fluctuates around, and that's a key difference in your seasonality. And it's also why people on the prairies who are making financial decisions with their crops or with their agribusinesses want to know what their local information is, not Chicago, because they're not being paid in Chicago, they're being paid locally. Now, that basis does float around with respect to a lot of different moving parts. By the way, as I was upstairs earlier, I noticed that this map is out of date. It doesn't include the nice little spur that runs up into southern Saskatchewan. It's called Northgate rail line. It's a high-speed rail line. Anyway, a lot of basis is determined by transportation cost, transportation availability, and it's increasingly on the prairies being determined by global merchants. Now, if I were a merchant for a Canadian grain company and I had just sold the equivalent of 3 or 4 boatloads of canola to Japan, I would want my company's system, it's inland terminals and whatnot, to start collecting canola, because we've got to fill those boats. We've got to originate the canola, get it in-house, load it on a train, get it to port. So I might instruct my elevator agents to offer good prices for canola, but because I don't want our system and our strategy to be cluttered up with spring wheat, drop your bids on spring wheat. So the fact that I've scored a big international contract means that I'm upping my basis on canola and pushing it down on spring wheat just to increase operating efficiencies internally. And so that's just one of the things that can change the basis. And the bases are not constant. Well, here we go, starting to look at the real world. And here we have the Manitoba soybean price, and which is in blue, Saskatchewan average elevator prices in red, being compared against the Chicago soybean price expressed in Canadian dollars. And the difference, of course, is the basis, and the basis levels have actually really deteriorated quite markedly since October. In fact, since October, we've had soybean prices in the United States expressed in Canadian dollars rallying higher, while we've been caught in our own private hell here on the prairies of prices heading lower. What gives? Sorry, I should have clicked to this slide before I said that, but one of the things we want to look at is this particular change in the basis and put it into context, and that's it right there, on a chart that contains the basis of the last 9 years. So we've had this big upswing followed by a big downswing. Well, I think that one of the things we can look at, let's go back a bit so we can see our timing. The upswing in the basis picked up speed here in late June and really rallied strongly in August and September. So that's part of the outbreak of the trade war between the tensions between Mr. Trump and China. And the Chinese retaliated against Mr. Trump's actions by saying that they were going to put a tariff on soybeans. It's my contention that some of the local companies thought, we'll get some of the replacement business. And so they started bidding up soybeans. They started accumulating soybeans. And then when the soybeans were all delivered, they thought, all right, we can offer these to China. And I don't think they got the business because they backed away from the market. They had seemed to have accumulated a lot of soybeans that they couldn't get rid of, so they backed away from the market, and the basis began to deteriorate. And that would make sense if China, in responding to this global disruption in agricultural trade, said, look, okay, let's keep this simple on ourselves. We're sending this many boats to Brazil. Let's get all the Brazilian beans. We won't be buying spring wheat from the Americans this year. So the boats that normally go into Washington State to pick up the dark northern spring from North Dakota, send them into Vancouver. We'll run the spring wheat out of Vancouver, and okay, we'll get everything we need. We're just going to source it differently. And so the guys who, the corporations, the Canadian corporations that thought they would pick up soybeans business may have just been disappointed because a country that's got 1.4 billion people needs to eat. It's not going to get really complicated over minuscule countries producing minuscule crops like soybeans in Canada, right? It's going to go for, let's keep it simple, let's get the job done. So they ran the basis up and then they ran it back down, and that feels like, because everybody remembers the short-term experience, that feels really painful. But in fact, they just brought it back into the trading range that has existed here on the prairies over the last 5 years since the end of the logistical nightmare that was characterized the winter of 2013, 2014. We've just gone back to normal. Now, I would say though, that for the people who've been jammed in their soybeans, if we look at the seasonality of the basis, it's not the seasonality of the price, this is the seasonality of the basis. We've done the same calculations, but this time just with basis, because when you have that many years of data on the basis, you might as well see if there's a seasonality, and lo and behold, there is. The seasonality of the basis turns up in April, and that's probably because some buyers enter our market then and start taking it. So they at that point, the Canadian trade, the Canadian commercials will have a chance to start working off some of what they took on and couldn't find a buyer for. The interesting thing is that unlike a lot of commodities, in the past, this has had its best basis at harvest time, which is rather peculiar. But you know, if somebody is normally trying to move out a lot of quantities at harvest while the crop is fresh, that would make sense. But, as I say, it's not different, it's different in price. So for people who are planning with the basis has its best, the basis is best in October, and its worst is in late March, but prices are best in June and worst in September. Any business manager is going to have to say, oh my goodness, what I want to do is I want to separate my pricing and basis decisions. They should not be done at the same time. Okay, these two components of risks have to be managed differently. So for example, what you would want to do if you were a soybean grower, you would be selling your basis in October. Now the only way you can sell basis, because there aren't contracts in it, well yes, you can have them with an elevator, you can have a basis contract, but the only way that you can really capture it is to sell your cash commodity. So you would sell your cash commodity there and either leave it unpriced, or you would, in order not to limit your upside potential, you would have to either replace it with a futures or an options contract so that you could dispose of them at the seasonal high, which would be 8 to 9 months later. Okay, so you're to optimize your soybean revenue then, your soybean pricing, you would want to do it in two contracts, in two different pieces. Now, looking at some of the others, here again, spring wheat, dark northern spring, the basis is absolutely ferociously good in late October, November. Clearly somebody comes into our market and buys our crop while it's fresh. Get her done. Then they back away, and the remainder of the year is, once we recover from the holidays, the remainder of the year seems to be your usual cake manufacturers and whatnot, just buying what they need, and so the market starts to recover. And of course, nobody does anything in the summertime. Oh, I would like to make a point about this. This is the Alberta basis this spring, and this is Manitoba and Saskatchewan. Why are they so irregularly high? Well, let's go back to something I said earlier about perhaps China, and we know that China has been a big customer for spring wheat. China, knowing that it's not going to be buying from the United States, didn't take any dark northern spring. It sent its orders to Canada, so the Canadian farm prices would be fairly good. Remembering that our basis in spring wheat is calculated off the Minneapolis spring wheat contract, futures contract, if the Americans aren't seeing the business, the Minneapolis futures price is not moving up. Okay? That business that they would normally see is being seen in Canada, and so it's pushing up the Canadian elevator prices, which are kind of tethered to Minneapolis. And instead of that buying interest pushing up Minneapolis, all it does is it pushes up our basis to really extraordinary levels for this time of year. It also,
Are those in the same currency? Have you got
Everything is, yes, it's all in,
each dollar?
no, this is all in Canadian dollars, this is Saskatchewan.
So Minneapolis is translated to Canadian dollars.
Exactly, yeah.
Exactly.
That was part of this morning's lecture, I didn't think that,
Very.
it's always hard to figure out which I should put in which. So the flip side of this is that if peace breaks out between the United States and China, China could start buying spring wheat again in the United States. The Minneapolis price would rally, and because they were sourcing their spring wheat there instead of here, you would see these basis levels crash down towards the average prices. Yes?
Yeah, I guess that's kind of my question, like, how much is it, US prices are going down relative to what would have happened without this trade, policy, and how much of this Canadian prices are going up?
Well, how much the Canadian prices are going up, as you can see that anomaly. The Canadian basis is about 50 cents a bushel better than it normally is at this time of year. So, I mean.
But like, that could be caused by the US price just going down, right?
Yes.
Or it could be caused by the Canadian price.
Well, the U.S. prices are broadly fluctuating sideways. The U.S. winter wheat prices, the soft winter wheat prices, which are traded on the Chicago Board of Trade, they have been very weak. The spring wheat prices traded on hard red spring wheat prices, dark northern spring prices traded on Minneapolis with a high protein content have been sideways in a volatile pattern. There's been a significant departure in those two wheats in the last 3 weeks. So again, here again, we can see that our prices are above normal because of that situation as the preferred supplier. And I would also caution these particular seasonal highs. The highs statistically in wheat in July are a bit dangerous because they're very often, it only takes 1 year out of every 7 or 8 where there's a drought scare and a big spike up in the market to bias the data for a particular time period. I would respectfully submit that the highs in May are a more realistic expectation of what a farmer should look for, rather than these highs here, which can be biased by 1 crop out of every 6 or 7. Again, that notion that we want, they come in and take our crop while it's fresh, it shows it very clearly there in this major crop, but all crops behave differently. Oats, I probably in the future should have Saskatchewan oats as its own basis. I could do that. I have tended to use Manitoba because Manitoba was traditionally the larger grower, though that's no longer the case. And there are beginning to be behavioral differences between the two. You can see that, and Alberta prices are just wild by comparison. Alberta oat prices do not behave like either Saskatchewan or Manitoba. Again, oats, we think they're really a low price these days, but in fact they are well above their averages. There's a great debate, just offhand, between analysts in my community as to whether or not the oat crop will be large or small this year. I think that the oat crop is going to be smaller than you would expect given the higher than average prices, simply because in many places it's going to be competing for acres with feed barley. A lot of people look at current feed barley prices and see dollar signs in their eyes. Canola, it's interesting that we've had this bear market on canola, and canola has been plunging like a diver, and yet, curiously, the basis for canola is a bit, in most provinces, is a bit above average for this time of year. Well, hang on a second, how does that work? If we have a bear market, why would the basis be up? Well, the basis is is up because the commercials are saying, oh, if you're going to sell it to us at this low price, we'll take lots of it, and in fact, we will buy it aggressively. It's sort of like, come on, give me more. Well, that's an indication of strong underlying demand. That's not a weak market, that's a strong market in disguise. And so the bear market in canola could be expected to end very soon. Another reason to expect that is if we look at canola's seasonal price, you can see that in the last 5 years when we've had big markets, the behavior of canola in the month of February has been, oh, we've got to sell canola, we've got to pay for inputs, we've got to pay down the bank lines. And so, unlike historically when canola could have some rallies in February, these days it just gets pummeled. And in fact, this chart goes up to the 20th of February and it was even down below that. So what's happening is that the trade, the commercials can see the farmer coming and they won't pay a nickel more than they need to get what they want. And if the trucks are lined up down the driveway, why would they raise the price? They're going to get the supply without raising the price. In fact, the next day they might even try a lower price. But the thing is that they're giving away, they're playing their hand. They're playing their hand because they're showing us that they're really secretly aggressive by improving the basis. So what happens? We get to March 1st, that's today, and very often a lot of lines of credit have to be cleaned up by then. The banks, kind of give that as a deadline for, could you show some progress on your line of credit? And then of course, then there's April 1st. And after April 1st, it's elevator up. And I don't mean it then as a grain elevator, I mean that as a price-taking elevator. So if you know any farmers, tell them not to be too discouraged, the relief is coming. Now, we have crops without basis. To have a basis, you obviously have to have a futures market, and there are no futures markets for any of the following. We have had barley futures contracts in the past. They ceased working. So you can just look at the seasonality of prices. And I will say this, when you see incredibly high prices like that, mathematically, you'd expect reversion to the mean, right? That's the whole concept behind. Does anyone ever know how Bollinger Bands can be applied to commodities? Where you look at your first and second standard deviations relative to the average? Okay. Well, anyway, there's a notion in price discovery that reversion to the mean is a very powerful force. Will come back to normal eventually. And so there, you should be able to draw forecast lines where you have this coming down. The interesting thing, going back over the last 20 years of feed barley statistics, is I could never find, in 20 years, I could never find a major top and downturn beginning in February or March. They just don't happen. Anything could happen tomorrow or Monday. But historically, they're rarer than hen's teeth. And so these high prices may linger until we get into May. And then when people say, oh my goodness, look at all the intended barley acres, and they've just gotten rained upon, we're going to have a crop, and then bloom, And then the interesting thing is that, I didn't include this in the presentation, the long-term charts of feed barley show that when it goes into a bear market, it doesn't go into a trending bear market. It has a tendency, all markets have behavioral personalities. And when barley starts dropping from a major top, it's just like a brick. It's just straight down. So that might be what's going to happen there, but that's beyond the scope of what we're looking at today. Malting barley, I included, these are North Dakota prices converted to Canadian. And the reason that we would look at North Dakota malting barley prices is that they have a longer history of a free market than we do because of the wheat board. The other thing I have to say is that the malting barley statistics pose a problem because there's a huge amount of malting barley grown in Alberta, but it's under contract, and private contract information is not available for you to make graphs out of, right? It's private is private. We'll never know what it was. And so the free, untethered malting barley prices in Canada tend to be a little bit more erratic of a data stream. And so it's a little difficult to coax the seasonality out of malting barley. One of the things when you look at the brief history of Durham as a free market commodity, I'd like you to note where these lows are. These lows are roughly $7. Now, remember that we don't have a lot of experience trading barley, and so we don't know what the Americans know when the American lows, and this is in Canadian dollars, the American lows for the same, just across the border, their average is a whole dollar higher. It's been my contention that because a lot of people in Saskatchewan and Alberta do not know how Durham should be priced, and therefore don't challenge the pricing. They're not familiar with driving across the border with a truckload and visiting their American cousins and marketing it there, that we're generally underpaid for our barley. Hopefully education will help take care of that. Green peas, major crop. Interesting, somebody takes the crop while it's fresh, they take some more here, whoever that is, and somebody else takes a big slug of them there. So, that's, again, you avoid the harvest lows. Now, you'll notice that in the last 5 years, the highs before Christmas are not as high as the prices they are in May. In terms of your marketing preference, you want to try and exploit those prices. Frankly, these are so far above average, I would market into those simply because of the concept of reversion to the mean. And yellow peas, absolutely unwanted, but it's also, by the way, I would point out that they have this kind of two-hump Bactrian camel look, whereas greens were more of a dromedary. So again, different buyers, different end users. And again though, good prices in May. What are most people doing in May? Most people are marketing. Most people are doing field work. No, they're not marketing, they're doing field work, they're planting, they're doing all kinds of other things. And because they aren't aware of the seasonality, they're leaving money on the table. It's one of those things where selling when you need the money just does not work as well as waiting a month. Well, if on every commodity, by timing your sales differently, you can pick up between 30 and 80 cents in the case of canola, you're going to be farming much more profitably. And not to bore you with all the different seasonalities, we do a lot of them, and a lot of long-term charts and all sorts of things. I also do a lot of ratio analysis because they're, what's rich and what's cheap. If you have 4 crops in your bins, what is the best one to sell? Well, the best one to sell is the one that's historically expensive on a ratio basis compared to the other 3 or 2 or 3, because it's already at a high price. If you want to sell it, hold the other ones for future recovery, because there's always a constant changeover going on. We do lots of things, but in terms of seasonality, by the way, that's the database it all comes from, is the Canada Grain database. And Professor Roy has an offer from Canada Grain for people who need data. The Canada Grain awards a data scholarship once a year. So that's, if you're interested in using the data, please talk to the professor, because Canada Grain wanted me to remind you of that. And any questions?